After revealing their reserves breakdown, Tether, the issuer of the most popular stablecoin, Tether, USDT, still needs to respond to skeptics that remain unconvinced by the latest numbers and what might be behind them. This time, despite the settlement with the New York Attorney General's office, NYAG, the independent accountant's report and the reveal of Tether's reserves breakdown, much of discussion surrounding the major stablecoin issuer over the past several days is focused on their announcement that, at the time of the audit, 65.4% of their reserves were held in commercial paper. First of all, the very reveal of the two pie charts left some industry observers baffled as they found it offered little information. Seriously, this is all Tether has seen fit to reveal, wrote Bitcoin and Tether critic, financial commentator Frances Coppola. If a bank produced an attestation like this as proof of reserve adequacy, it would be marked 0 out of 10 and sent back to redo its homework. For Coppola, whether Tether's reserves are cash equivalents is irrelevant, and what matters is capital, which is the difference between assets and liabilities, and the attestations reveal that Tether has very little capital. She added that stablecoin holders are thus seriously exposed to the risk that asset values will fall sufficiently for the par peg to USD to break what money market funds call breaking the buck. Caitlin Long, founder and CEO of Avanti Financial Group, said that Tether finally disclosing how it invests reserves likely contributed to the latest crypto sell-off. There's now much bigger risk that Tether may break the buck, trade below par to the US dollar, amid a credit market correction. Then, there is the commercial paper issue. It is a common type of unsecured, not usually backed by any form of collateral, short-term debt instrument issued by corporations, typically to meet short-term liabilities. Markets already had independent confirmation that Tether had very little bank deposits in its reserves, but now we know its reserves are mostly invested in credit assets of who knows what quality, not T-bills or other short-term, lower-risk, liquid securities, said Long. She added that even more disclosure is needed now and that she'd continue to support Tether, but that she can't defend Tether's choices on asset allocation and making no-risk disclosure. These are, she said, a missed opportunity and damaging to the whole industry. The US regulators have big power over stablecoins, she said, and making peace between the two would be best for the industry. This type of investment, some argue, in very simplified terms, leads to a complex string of actions and reactions potentially causing increasing systemic risk, which may potentially lead to illiquidity, and USDT becoming worthless.